right, welcome to Beyond Payments with Dr. Chi. For today, we are looking at the topic, Demystifying Payments, how money moves behind the scene. And we're focusing on POS today. And before we jump into this, I just want to give us a brief background about POS transactions. According to the report by Nairametrics, on February 4th, 2025, it was stated there that POS transactions in Nigeria surged to 18 trillion naira in 2024 alone, which is a massive 69% increase from 2023. This explosive growth highlights a clear shift in consumer behavior, with POS quickly becoming the dominant payment method across the country. But with this growth comes a new set of challenges: transaction declines, chargebacks, fraud, disputes, and refund complications are becoming more common and costly. Despite how often we use POS system, many people still see payments as a simple process, money leaving from one account and arriving into another account. But behind swiping your card or tapping your card on a POS terminal, there are layer systems. There are so many transactions that happen behind the ground, and that is what we are looking at today. And for today, I have with me Mr. Felix Masade, who is a senior manager, strategic and business development at Network International. He's here to help us break down what are those things that happen. How does money really move behind the scene? Because it's not just about raising your card, going to a shop, swiping it or inserting it to make payment. What happens behind the scene? And we need to understand that today. So today we welcome Mr. Felix. Mr. Felix, welcome on the show.
Thank you so very much, Doc Chi. Once again, I want to thank you for bringing me to your platform and talk about payments. I really appreciate that. Thank you.
Thank you very much.
You're welcome then. Yeah. So
all right.
I should go ahead, right?
Yes, go ahead. Let's just jump into this immediately and discuss. So I have a couple of questions I'm going to be asking you, as regards these POS transactions. And I just want you to break it down for us. Take it that we don't know anything about this. Break it down for us, so that we can flow. So first of all, before we even start talking about POS, I know that you've been in payment industry, it's something that is at the tip of your fingers. So just run us. How has your journey been in the payment system? Just briefly tell us that.
Fantastic. Thank you so much once again. Like you said, you've called my name. I'm Felix Masade. I want to say that I'm an experienced fintech executive with a strong track record in the payment industry, particularly in driving strategic business growth, digital transformation, and cross-border payments. Over the past decade, I want to say that I have played key leadership roles in leading high-profile financial technology companies, payment companies, in their digital transformation journey. Some of which, of course, they are well known, the likes of Unified Payments. I would say my payment foundation actually started from Unified Payments, where I spent close to about 6 years, thereabouts. And of course, I moved on to Express Payment, eTransact, Arca Payments. These are top. I'm highly privileged to have been part of their success story, to be very honest. I still pay homage to my boss, that's the MD of Unified Payments. Thanks to him. I like his wealth of experience, his insight into the fragmented, payment landscape. When you look at the Nigerian market, very fragmented. I always tell people that the Nigerian market is not, the Nigerian payment system is not normal, right? What is obtainable in other markets, you don't have it like that here in Nigerian market. So, and of course, I give thumbs up to that's Mr. Agada Kochi. Thanks so much. Then, yeah, so I think that's how my journey has been, but it's been fantastic. I think one of the things I want to say here is, you see, when you love what you do, I think that's where it starts from. I fell in love with payments. I actually started my banking career with Union Bank, spent a few years with Union Bank before progressing to Access Bank, where I spent 5 years. From just a contact center, um, I had the privilege of working with this fantastic lady then in Access Bank. Of course, she was the one that saw some potentials. She saw some things in me that I didn't see for myself. And of course, she asked that I lead the team, and she influenced my migration from being a contact center supervisor to start working in channels. That was why I picked the interest. I worked on the
Wow.
channels where we're managing ATMs, across the country. It was a fantastic experience for me. And I just fell in love with payments. I just fell in love with payments. And of course, the rest is history. I found myself in Unified Payment. That was 2014. It's a fantastic journey. Work with the likes, some of the very, I would say business-minded, individuals. I would always make reference to my boss. His name is I think he's retired now, Mr. Ben Edafejebrel. He was my teacher, right? He taught me business writing skills, communication skills. Like I said, it's been a fantastic journey, and of course, here I am. And for now, I'm with Network International. Thank you.
Wow, that is a beautiful story, man. But you've been talking about payments, unified payments, ACA payments, now in Network International, which is also a company that is into payments. And a number of people have been hearing payments, talking about payments, but what exactly is this payment? Can you just break it down for us? Payment, what does it really mean? Just in a few sentences, what exactly is payment?
Okay. Thank you so much. Well, simply put, payment refers to the transfer of money from one party to another using digital means, digital technology, such as, could be card, it could be mobile apps, it could be online payments, right? Instead of cash, instead of physical cash. Now, that is the simple example. However, let me also tell you, because, and again, I think at this point, we just have to be patient with the transformation, really. Take, for instance, I just give you just a small example. To fill your tank now, you need over 50,000 naira, right?
Yeah.
And you can imagine you drive to a gas station, you bring out your wallet. I don't know if your wallet can even carry 50,000 now. And you have a few other cars behind you, and you will count 50,000, right? God help you. You have 100,000 notes, not 200 naira or 500 naira. You understand what I'm saying? Then you count and give that to the attendant, the gas station or the fuel attendant. He would also do another counting. You can imagine the amount of time it take to consummate just that transaction. So I think these are the values we see when we talk about payments, digitizing payments, right? So you can imagine, right? Instead of bringing the 50,000, you just bring your card with just a single swipe or a tap, or you insert into the terminal, you impute your PIN, the transaction is completed, right? So that's pretty much payments. You're transferring money from one party to another, using digital means instead of
Without
cash.
cash.
Instead of cash. That's pretty much,
That's
that's it basically. That's
Yeah,
it.
so since today we are focusing on POS, and you just mentioned using your example, citing an example of going to a fuel station. I want to, top up my fuel. I want to pay, maybe using a POS terminal. Of course, I will have to bring my card, swipe my card, or tap my card, or insert my card in that POS. But does it stop there? So if I want to make payment using POS, who are the players? Who are the key players for that single transaction? Does it mean that once I bring out my card and tap it on that POS, money will move from my account and move into the fuel station account? What happens? That is what we are looking at today. Who are the major players for this POS transaction? Thank you.
Fantastic question. Thank you so much. Yes. First, when we talk about the POS device, we're talking about, we all use the word POS. POS. What is
Mhm.
POS? It's actually point of sale terminal. Point of sale. That's the POS. That's what it means. And it's actually a tool, right? That is used by merchants, shop owners, right, to accept payments. So it's pretty much a tool. So that's what it means, basically, right? Now, when we're talking about the parties involved, right, to consummate just one transaction, I would at this point, I want to, there's a bit of a caveat, right? Like I said, it's not cast in stones, right? But I will just give you so of course, so that the audience will understand, I would say there are basically 4 to 5, they're what we call the four-party model. The four-party model. Now, let me begin with the four-party model, right? In the four-party model, you have different entities that work together to make transaction happen. The first I will begin is the card holder, right? That is the customer or the person with a card. It could be a debit card or a payment instrument. Most times we use okay, let me just, for the purpose of this conversation, I would use the word, let's focus on card, right?
Okay.
The card holder, okay? That's the first party in the four-party model. Then the second entity is that card was given to that card holder by an institution licensed by the Central Bank of Nigeria to issue. Not everybody can issue cards, right?
Yeah.
You have to be a deposit-taking institution for you to
Mhm.
issue payment cards, right? So that card was given to that person, to the customer, by an institution. So we call that institution in the payment world an issuer. So an issuer has issued a card to a customer. So we have identified 2 parties. So we have the card holder, we have the issuer.
Yes.
Fantastic. Now we have 2 more parties to define. So now that card will be used on, we're focusing on this, for this purpose of this conversation, we're focusing on
Mhm.
POS, right? That
Yes.
card will be used on a device, on a POS device. Now, that POS device is owned, or that POS device is being managed by a merchant. That's the shop owner. That
Okay.
is called a merchant. So we can see we have identified 3 parties
Okay.
now. Now, the fourth party, well, that's what we call the four-party model. The fourth party is that merchant, right, has no right. Okay, like I said, the Nigerian market is very fragmented. You'll be shocked that
Yeah.
there are some merchants that buy terminals.
Mm-hmm.
It's a very funny market environment that we play in. It's a very funny market environment. Actually, maybe in another conversation, we'll take this up.
Okay.
There's what we call the payment terminal service provider, the PTSPs. These are the
Okay.
licensed institution, right, recognized by the Central Bank of Nigeria to work with acquirers, work with banks to deploy those terminals, manage the merchant and the terminals, ensure that the terminals are up and running, right? So, but for the purpose of this conversation, I will just keep it that the merchant has a terminal. So the merchant is one party. Now, the bank that serves that merchant, right, is called the acquirer, the acquiring bank.
Okay.
So those are the four parties. So you have the acquirer, the bank who provides the merchant with a POS terminal such that the merchant can accept card payments. So the acquirer, the merchant, the card holder, and the issuer. So these are the basic four parties, right, that make transactions happen. So now, so those are the parties. So now, if you want me to take through the journey in terms of the transaction journey,
yes,
or
because we actually need to understand, while we understand, okay, yes, we have identified four major parties. That is the card holder, the bank that issued the card, the merchant that is using the POS, and the bank that issued that POS. But is it just these four, that take care of transactions? Is it just these four players that make a transaction of POS to work? Because I'm just wondering, for the sake of the people that are going to be listening to us, right? If myself as a card holder, I take my card to a merchant and I swipe or tap that my card on the POS, what happens actually behind? Is it that money, like I asked earlier, money will move from my bank account automatically to the merchant's account and the transaction is concluded? Is that how it happens? Let's just, educate our listeners on how this actually happens. Thank you.
Thank you so much. Yes, it is as simple as that, actually. It's as actually simple as that. Okay, but just to break it down, it's now there's another there are other parties actually, but in terms of when we're looking at the four-party model, these are the four. Then we now have some, I would say, for example, in Nigerian market, we have what we call NIPS, the Nigeria Interbank Settlement Service, right? What they do is they aggregate, they are called aggregators. All terminals today are supposed to be connected to NIPS, right? Then you also have those that we call the payment processor, or we call them the third-party processor. Now, for every bank, right, every bank would work with a third-party processor. What they do, the processor, they are the ones that would work with the banks. You're either working with an issuer or you're working with an acquirer to process those transactions. So the way it works is, I, Felix, I take my card, I insert it on a POS device, right? Now, that transaction leaves that terminal to, like I said, there must be an aggregator, a payment terminal, the PTSA, that's the payment terminal aggregator. That's NIPS. It goes straight to NIPS. So that's the first point of call by CBN rules. From the terminal, it goes straight to NIPS, which is the now there are two payment PTSAs in Nigeria now. They just recently licensed Unified Payment as one of the other PTSA, right? So now it leaves that terminal, it goes to a PTSA. Now the PTSA will identify the processor that the merchant or the acquiring bank has assigned to facilitate those transactions. Because what you do when you insert your card on a POS device, a couple of things is we call it authentication request. I need to authenticate that card, right? I need to authenticate that card to be sure that, number one, this card is valid. So that means from the POS device, I need to transmit message to the issuer, the bank that issued that card. So we call that message authentication request. I'm sending an authentication request through the different parties, the different channels, to the bank to confirm, Felix, is Felix's card genuine? That's what we call authentication. I need to authenticate. That's the first thing. Is Felix's card genuine? Right? The PIN that I used, is it correct? So most times when you use your card on a POS, you insert, you impute your PIN, you see PIN okay. Those are the checks that go on behind the scene. So that message, now when it comes to payment is about communication. Communication is a two-way. As I'm talking, you are listening. Am I correct?
Yes.
That's pretty much what happens when we talk about payment.
We provide a response.
Fantastic. So I'm sending that from the terminal through my acquiring bank working with the processor. They fetch those information and pass it to the issuing bank, the bank that issued that card. The card, is the information correct? Is the PIN correct? Is there money in the account? Once these validations, these checks are completed, it sends back what we call authorization response, authorizing the merchant to release, to give value. That's where you see the approved, a receipt prints out and you see approved, right? So that's pretty much the transaction flow. And all of this in the normal process takes between 5 to 7 seconds.
Wow. Irrespective of the fact that you have so many parties, sending message, receiving message, just within 5 seconds, a transaction is consummated.
Absolutely.
Based on your explanation, we also, which means that before a merchant will release good, an authorization response must have been provided to the merchant stating that this transaction is successful. And is at that point that the customer or the card holder is debited. But we've also seen circumstances where a card holder is debited, but the merchant does not release good. Why then is the card holder being debited, for that transaction, even when he has provided his PIN? What could have happened, in between that will cause a debit to happen? Because from what you were explained, there must be authorization response before a cardholder is debited, and then the merchant releases good. But we have seen situations where cardholder is debited, but the transaction actually failed. What could have caused that?
Fantastic question. A couple of factors. A couple of factors. Now, maybe at this point, I would say that, okay, just to make it simple, you agree with me that sometimes you pick up your phone and you are dialing, I'm dialing Dr. Chi, right? Mm-hmm. I'm hearing another person picking up the,
That's
a
true.
lot of things happen in our payment space. And of course, there are a couple of factors, like I said. You have we all understand that the internet service in Nigeria, needs to be improved. There are a couple of connectivity in our space, right? That, all the parties must come together and ensure that we work to improve our the experience, basically. So it's the same thing that plays out here. Like I said, there are different parties involved, because it's a two-way thing. Now, take for instance, I've sent an authentication request. I want Felix. I come to let me say Dr. Chineri's pharmaceutical company, right? You present a terminal, you provide a terminal for me to swipe or to insert. I'm supposed to debit my card 50,000, right? The message leaves the terminal through your acquiring bank, then it goes through a switch to my my issuing bank, let's say my card is Access Bank, it goes to Access Bank. So Access Bank checks Felix has enough money, the paying is correct, and he authenticates that transaction and he releases, because immediately a lien or a debit is placed on my account,
Yeah.
right? So now it's coming back with an authorization request to the terminal. Don't forget, it leaves my bank, right?
Yes.
Now it's coming down to, it will still go through NIPS because it, it goes to, so there are different touch points. So
yeah,
anything can happen. Guess what? If he's on his way back, NEPA NEPA goes off, internet goes off. Sorry, we're just making it interesting, but the truth is that's pretty much what happens. So anything happen in the journey, in the transaction journey, right? So that's pretty much, those are the things we could picture to say anything can happen. Sometimes it may be timeout. You see, there are a couple of error messages. Sometimes it could be a timeout because, like I said, the terminal is, for every transaction, there's a time limit. If it exceeds that time limit, the POS, will not respond to that transaction, so it times it out. It could be that at that time, my bank has already debited me, so the money is kept somewhere. So those are so there are different factors that will cause that to happen. Yeah.
Wow. This is interesting. So if I may ask also, for a successful transaction, like we said, when these messages are sent, instantly the customer's account is debited, right? But we also notice that in most cases, the merchant account is not credited, right?
Yes.
So what happens? My account is already debited, but the merchant account is not credited. Why? What causes that delay for crediting of merchant's accounts?
Fantastic. Okay, fantastic. Thank you so much for that, Donchi. I think another area again, I think we need to understand the space. Okay, this may not necessarily be an issue. Okay, there are two major types of settlements. You have the traditional T+1. We call it, terminology T+1 means transaction day plus one. So if I use my card for a 50,000 naira transaction, it means the merchant that gave me value will get that 50,000 the next day. That's what it means. Transaction day plus one. Okay. So that's a typical, the traditional settlement cycle. Okay. Now you also have T+0. It means instant settlement or same day settlement or hourly, as the case may be. So these are the two typical transaction settlement cycle. So it depends on what that merchant has subscribed for. So if the merchant has subscribed through his acquiring bank, I've subscribed for, I want instant settlement. You go for instant, you can get it instantly, or you can get it T+1, or hourly or same day, right? Or if you have subscribed for the normal, I know there may be one or two, maybe you need to subscribe for it, you are going to pay an additional fee or something. That's pretty much how it works, right? Now, I'm also aware, okay, like I said, the Nigerian market is fragmented. So when we talk about this thing, sometimes we just put all the cards on the table. We understand that the way the system works today, because of the proliferation of agency banking and all of that, that whole space has been tweaked. It's significant, where the for every transaction the merchant wants to receive money instantly. It's fine. However, the movement of funds will still, those are just innovation to give the merchant value, but the actual movement of funds, where, don't forget, the acquirer, the merchant is giving value, and the merchant is connected to an acquiring bank, right? The merchant cannot go to